Hello guys, and welcome to Trading Face. This video is a Binance copy trading tutorial. If you're looking to copy trade using the Binance platform, we'll go over exactly how it works, how to navigate this system, how to actually go ahead and copy, and then some of the risks and other things you should be thinking about. If you actually want to go ahead with this, I'll leave timestamps down in the description. Binance copy trading for right now is futures only. So if you're in a country that doesn't allow future trading, you won't be able to use this. I will leave a link below to Binance as well. If you are in a country that allows future trading, you can get a deposit and trading bonus. Also, you can get $10 bonus voucher to test how copy trading works. To receive it, you need to register via our link in the description, finish verification, and make your first trade. But for right now, we're going to go to Binance Futures, and then once you click into the Binance Futures page, you can see copy trading up there. Now you can see it kind of disappears right now, as I said. This is a brand new feature, so if you can see it here, copy trading, just click on that. Or you can just search for Binance copy trading in your application and it's there as well. Once we're here, you can see the overview. So firstly, we need to search for all the copy traders and their performance over time. If you come down to the portfolio list right here, you can see different things that you can look at. The 7-day, I would change this to 90-day or 30-day. What we're looking at here is the history of these copy traders. So what we're really looking for is a history, and is that history good? Because if they're obviously losing a lot of money, you're not going to want to copy trade. So go to something like 30 or 90 and you can see what they've done over that time. Then what we can do is actually search via these options here. So P&L is profit and loss. So you know what's the actual P&L of that trading account? You can see that as the best trader right here, and then the P&L of various other traders, you can see this is in dollar terms. So that's how much they're making, and this is the return on investment. You know, the percentage gain versus what they had in their account. Obviously, the more profitable traders you're going to be wanting to look at. However, what I would suggest is going for the longest time frame possible. You want people that are actually making money over, a longer time frame, because anyone can get right up to the top over a 7-day period. They get lucky in a trade, goes really well, but then the rest of their account, they're making losses. So you have to look at all of the history of the copy traders. Then we can go to RY, which is obviously return on investment here, and you can see that MED is maximum drawdown. So the maximum drawdown is if they've lost the trade or they have losing trades. What is the maximum drawdown for those accounts? What I would suggest is you want people who are making decent returns and not having huge drawdowns in the accounts. Because if they're having big drawdowns, what type of risk are they taking? Are they kind of too less so fair with their trades and everything like that? So you can obviously make those decisions, but see what the maximum drawdown is. So he's not actually had a loser in his trades. So you can just see their history and see if they're actually a decent trader or not, or if they're just kind of punting around, right? And then we can see here AM assets under management. This shows us the traders who have the most under management. It's right here. So this guy has, 1 million under management. Now, traders that have larger amounts under management are going to trade very differently because they have copy traders. They may trade larger assets because with more trading, you need more liquidity. And so you need not be able to trade larger trades. If you have traders that have very small amounts under management, they trading altcoins. So that can actually be part of your strategy to copy more than one trader at a time, or maybe have a collection of them that trade different things. That's up to you, the amount of copy traders to the amount of people that are actually copy trading them. I think there is a limit of around 700 per copy trader. So what you can do is press copy or press full here. So if you press full and it's full, so there's 700 traders copying. If someone drops out copying, then you can obviously fill that place. Copy trader P&L is different because when copy trading, you can actually copy the trader's entries and exits and their trades, but you can also really choose how much you copy. So are you going to copy the exact size that they trade in, or are you going to copy smaller amounts? Is your stop loss and take profit level different to theirs? You can choose all of that. And so what I would suggest is looking at the trader themselves, what they're doing, because the copy trader's P&L, your P&L, and all the others people's trading P&L could be wildly different to what the copy trader is doing because they may have different inputs. So important to know that difference, and we'll go through that in a second as well. But that is navigating this system and looking through different copy traders and what they're doing. Now we'll click on our copy traders page, and you can see all of the details of how they trade, the losses that they're making, the profits that they're making. So we're going to click on this guy right here and then see exactly what they're doing. What we can see is how they trade and every single trade that they've made. So we know if they're maybe more of a long-term trader, if they're a day trader, if they're like, trying to scalp trades, we can see all of that, and that's going to tell us a lot about what they're doing. This trader has a lot under management. Maybe we can look at 30-day performance. We're going to look at 30-day P&L. So 30-day P&L is pretty good, right? As you can see here, they're making decent profits over the last 30 days return on investment. So as you can see, if they have current positions, then people are going to be trading. If the trader isn't trading or doesn't have any open position history, we can see here so we can look exactly what this trader is doing. So that was basically a scalp trade or something like that, right? And so a profit there. So we can see here, usually the positions are open for probably a couple of hours, maybe a day, something like that, overnight. Pretty short-term trading. These are just kind of day trades, scalp trades. Maybe they're looking at, different technical analysis to open these trades. But a lot of these trades are, short-term day trading scalps like this and, small kind of profits over that time. Obviously with leverage that can change as well though. And then trade history, you can see all of the actual trades that they've gone in and out of. As a copy trader, you would be looking to copy that opens and the closes. So you can change the amount that you put in per trade transfer history and then copy traders. You can see all of the different copy traders that are copying this trader and the return on investment that they've made as well. If you're happy to copy a trader, you can click copy and then you can really dial in the way you want to actually copy these trades. So if we click on copy on a trader, as long as we're allowed to do that, if it's not full of other copy traders, you have two options here. You have fixed amount or fixed ratio. So fixed amount, each order will be opened at a fixed margin amount or cost per order. So let's say the trader opens a trade. You can say every trade that they open, I want to open a trade with a specific dollar amount in my account. So if they open one trade with $1,000 or whatever, you can say, I just want to open each trade with 50 bucks, right? So it doesn't matter if they're trading 1,000 or 500,000. Your trade is exactly the same. Maybe it's $1,000 per trade or whatever. Fixed ratio is your opening trades in the relation that they open trades in their account. So again, it's not the exact amount that you're copying, but as an example, if they have, $100,000 in their account and they open a position in Bitcoin and that position is around 10% of their trading account, you will copy that for you. Now, you may not have the same amount of money that they have, but it's going to open 10% of the amount that you have. So if they open a trade with 30% of their account, 30% of your account will be traded as well. So you're trading with the same percentage that they're trading. Which one should you choose? With fixed amount, it's very simple. You know exactly how much you're copying each time. So $100 per trade. The fixed ratio, this could lead to, different margin requirements for you because they have different margin requirements. They have a different amount of money. So I would just be careful with know how exactly you're trading. You just need to make sure that you have enough margin in your account to fund everything. So fixed ratio may be a little bit better to go for. So that's maybe reducing risk a little bit because you know exactly how much percentage they're opening and you're opening the same percent with fixed amount as long as you have lots of margin in your account. It doesn't really matter, but of course, if they're opening positions that are, let's say 20% of their account with a fixed amount for you, that could be 20, 30, 40, or 50% of your account, especially if there are multiple trades open at once. So you just have to make sure that whatever is happening here, you have enough margin to fund trades. Because if you don't, then the margin is going to get quite tight for you and you could get liquidated if you're making losses in some positions, whereas the actual trader may not be because they have enough margin. We'll look at fixed amount trading first. Then this is when a trader opens a position. You open the position at the same time in the same direction, but you just choose a flat amount to open the trade with. So let's go cost per order would be $50. So $50 per trade, you open that. The total copy amount is the total amount of margin that you want to put in to copy this trader with. So if they're opening 10 trades, cost per order would be $500 for you, or the total cost $500 for you, and the copy amount, you want an amount of margin that can fund those trades, and fund potential losses of those trades and keep them open. So the total amount that you want to put towards copying that trader, and then if you have many trades open, that will be this. So this has to be more than the cost per order, and then the total stop loss is you can actually create a stop loss where if your margin, which is this 1,000 here, if this gets down to a loss. So let's say they opened 7 trades. A few are in a loss, fewer may be flat, and you're getting down to, like a 30% loss on your total copy amount. That's when trades will start to be stopped out for you. Now, this copy trader may write this down to 50 or 60% loss. If you're not comfortable with that and you don't want to write that, or if they've just opened a lot of orders, and you're actually having a cost per order that is more than them, or as a percentage of your account more than them because you're on a fixed amount, what you can essentially do is just, for example, bottom line, is that if my $1,000 account is 30% down, I start when I want to start trading out of positions and start liquidating them for a loss. So that you can see down here your total loss would be 30%. So that's something that you can look at throughout time. You can actually change the copy amount. You can add more margin if you want. Obviously, that just means that you are putting more towards the trades. This is a stop loss, saying that when we're down 30%, we are out. Advanced settings. You can copy the margin mode of the lead trader, or you can go to fixed mode. So they might be using isolated margin or cross margin. Isolated margin is where they fund individual trades. Cross margin is where you just have an amount of money to fund all of the trades. Isolated margin can be a little bit less risky than cross margin. So if you go to fixed mode, you can actually change this, because remember, what's happening here is when they open a position, you open a position in your future trading account as well, and so what you can do is manage those positions. You can actually go into your futures trading account and just edit out of the positions. You can trade out of them at a profit or a loss whenever you want, and you can add margin to different positions. So you can actually do this yourself. If you want to choose that, you can just copy the lead trader's margin, and here leverage, you can also copy their leverage. Again, if they're trading with, let's say, 2x leverage, and they're taking, less risk in a position, if you're opening with 10x leverage, you're copying the side of the trade. If they're long, you're going long, but the risk is totally different, right? So if they're only using 2x leverage and you're using 10, it's a larger amount of your position. Maybe you don't have enough margin, maybe a 5% loss for them is like a lot bigger loss for you. You get stopped out, you lose money. Actually, they just were using a small amount of margin. Price came down and then went back up. They actually, made a good trade, but because you were using more leverage, you got stopped out. So that's where changing this essentially means that your P&L can be very, very different to the trader's P&L. So definitely keep that in mind. Maybe you just want to choose copying the trader's leverage, or you can just choose a very small amount and trade that. So traders may use anywhere from kind of 5 to 20 margin. Maybe that's just not comfortable for you to use. And you say, what, I just want to copy, but 1x margin or would be no margin or 2 or 3x again. That's up to the individual. Margin can be risky, especially if you're copying a trader who has different amounts in their account as to what you have. Then right here for each single position, you can choose a take profit and a stop loss. This is different to here. This is for your account generally, and what it's trading, it may have 10 positions open. This right here is each individual position. So if the position itself is down 15%, cut me out, right? I just want to get out. I don't want to go down 30, 40%. If the trader has a different stop loss to you, your P&L is going to be different to them. But you can do that on a position basis. And you can say if we're making a 25% gain or a 30% gain, you can take a profit and actually trade out of that position. And again, they may have no take profit. They may write it to 60 or 70%. They may, do something else. So your P&L may be different to them if you choose this, but it is risk management if you're not comfortable with kind of seeing, bigger losses in the account. And for sure, these traders can make losses and they may ride a position down kind of 80% or so. Now, obviously, that's not good. We can also choose max position per symbol. So again, if one trader is taking a huge bet on one position, then you can kind of limit that and say, we don't want the whole account getting wrecked by one trade. And so you can put that in maybe 50% or 20%. And again, your P&L was going to be very different to the trader if you're, doing this, but that's up to the individual trader. Then just read the service agreement. I would read this carefully. There are many risks here, especially with copying traders in terms of your margin, right? Because it's really up to you. You're copying the insurance and outs, but the margin you're using, how much margin you have to fund trades, how much leverage they're using, all of that is going to determine how your account is actually traded. So they could be using less margin than you, more margin than you. If you're not managing these positions carefully, you can get stopped out in one trade. You're like, what happened? They just used a ton of margin. You copied that. You didn't have enough margin in the account, and they kind of didn't blow up their account, but you can blow up yours. So there are many risks here, and I would definitely read this and just make sure you're happy with that. And then go ahead and copy, and you can essentially open trades if the lead trader is opening the trade. If you do have any positions open, they're all going to be in your futures trading account. You can also see them in the overview right here. So if you just go to this area right here, it is going to take you through to all of the positions that you have open. This is brand new, and I've not been copying anyone on the Binance platform. Is right now, it's just open. But ongoing, any trades that you have, you're going to see this. So if you have an amount of margin, right? Let's say you have $1,000 in the account for margin, you can see the realized P&L net profit here. So if you know your net profit is in a loss and the margin balance is getting pretty low, you can add margin in if you want. You can take it away if you want, or the portfolio list right here is going to show you every single trade. And then on the right-hand side, there should be an option to essentially get out of that trade. If one trade's in a loss, you want to cut it, you can manually cut it here. There will just be an option to cut it, an option to view it. You can see all of this. You can click these. This will go through to your futures trading screen, and you should be able to see all of those orders live as well, because your account will be opening these trades. It's just an instruction to say open this trade when this other trader opens their trade, but these trades are yours. They're your futures trades. You can manage them in any way that you want, but you can see all ongoing trades and close any trades here. So that's all. Thank you for watching, guys, and don't forget that you can receive $10 voucher bonus for test copy trading. Just use our link below in the description. Bye and have a good day.